The Reserve Bank lifts the official cash rate for the 12th time in 14 months and warns there could still be more on the way. The boom times for Australian crop growers look to be coming to an end, and TikTok usurps Snapchat as the third most popular app in Australia after Facebook and Instagram. It's Wednesday, the 7th of June, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, your interview today is with Eleanor Casapides, who is the Senior Manager of Tax Policy at CPA Australia.
All about what investors should be thinking about now ahead of tax time, and then once 30 June ticks over and we've all got to fill in our tax returns, what they can and can't claim. So certainly an interview for investors.
Yeah, it's a really good one. It's brought to you today by Stake, one of our supporters here at Fear and Greed. The main story this morning, Sean, the Reserve Bank lifted the official cash rate yesterday by 25 basis points, saying that inflation at 7% is just too high.
That's it. The central bank said the hike yesterday will provide greater confidence that inflation will return to its target of 2 to 3% within a reasonable timeframe. In a statement after the decision, Governor Philip Lowe said high inflation makes life difficult for people and damages the functioning of the economy. It erodes the value of savings, hurts family budgets, makes it harder for businesses to plan and invest, and worsens income inequality. If it becomes entrenched, it will lead to even higher rates and a larger rise in unemployment. After last week's big jump in award wages, Phil Lowe, the governor, said that unit labour costs are rising briskly, was his word, briskly, with productivity growth being subdued. He said as long as productivity improves, wages growth in the system is okay.
What do you take from that? Is this the last rate rise?
Hard to say. Lowe said the path to achieving a so-called soft landing remains a narrow one, mostly because it's not clear whether household consumption will hold up. There's a real risk now, as Commonwealth Bank economists noted yesterday, that the Australian economy could go into recession as a result of ongoing rate rises. The governor said some further tightening might be required, but it depends on what happens from here. Financial markets think there will be another rate rise. I think it's fair to say that previously the Reserve Bank was determined to lift interest rates, whereas now the board's not so sure, but it certainly isn't off the agenda.
How long does it take for this to kind of filter through then? Because it feels almost from what you're saying that it might be a little bit of almost a wait and see approach. How long will they need to wait?
Well, it takes 12 to 18 months, or that's what I learned when I did economics at university, 12 to 18 months for an interest rate to fully flow through the economy and impact the economy. Now, the first one we had was 14 months ago. We've had 12 since then. That first one hasn't fully filtered through to the economy, theoretically. What it means, we're seeing now with Wesfarmers last week, we had Bubs Australia yesterday, a bunch of companies coming out and saying things are slowing down. The Reserve Bank highlighted consumption yesterday as being a real concern for it. People just aren't spending as much. Consumption, of course, is the biggest part of the economy. Therefore, that could slow the economy, and the Reserve Bank is worried that the full impact of these rate rises will start to hit in the next 3, 6, 12 months, and the economy will end up in recession.
Okay. And so then in the short term, what's it mean for us mere mortgage holders?
Yes, we mere mortgage holders. Well, we've had 12 rate hikes since the beginning of May last year, and the cash rate, which is used to set other interest rates, is now at its highest level since 2012. That's 4.1%. There are about 3.3 million Australians with a mortgage, Michael. The standard variable rate at the moment is now in the mid to high sixes. The latest rise will add $114 to the monthly repayments on a $750,000 variable rate home loan. That takes the total increase in monthly repayments since the beginning of last year to more than $1,800. Alongside the cost of living, or the increases in the cost of living, that rise will definitely dent consumer spending. It already is, and that's why the Reserve Bank and market economists are worried about a recession.
All right, how did local markets respond to this yesterday, Sean?
Well, the Aussie dollar jumped immediately after the announcement to above 66.5 US cents. That's because people are taking a punt that interest rates in Australia will rise. Bond yields rose, suggesting that professional investors think following yesterday's statement there is more chance of a rate rise. That's a further rate rise, I mean. And the share market fell almost 1% in the minutes after the 2:30 p.m. announcement, before rebounding somewhat. Then the final minutes of trading, it tumbled again. By the end of the day, it was down 1.2% to close at 7,130 points. Consumer discretionary stocks were hit hardest. Now, they're the companies which will really feel the effect of higher interest rates on consumers. Discretionary as in discretionary income. Of course, if people have less discretionary income, those companies aren't going to sell as much. Industrials fell as well, so too financials, healthcare and telcos. In fact, 19 of the top 20 stocks ended lower yesterday. The only one in the black was Fortescue Metals.
What about international markets? What's happening there?
Well, global equity, in Australia, we haven't had a good run, but global equity markets have done pretty well recently, with the S&P 500 on Wall Street trading around year-long highs. The Euro Stoxx 50 is also close to record territory, and Japan's Nikkei hit a new multi-decade high yesterday. It's up 23% this year. Now, that compares to about 3% for the ASX 200. Few key reasons. The market definitely was undervalued at the beginning of the year, and some economic reforms out of Tokyo have been well supported. And then Warren Buffett's Berkshire Hathaway in April very publicly bought into 5 Japanese stocks. Now, these are the big conglomerates, Mitsui, Sumitomo, etc. Mitsubishi was another one he bought into. They have a broad range of interests: real estate, tech, healthcare, retail, financial services. The speculated theory is that after 30 years of deflation, because Japan has had deflation for many decades, Buffett realised that Japanese companies were undervalued, particularly in an inflationary environment. Suddenly, the Nikkei's trading around its highest level since 1990. A very interesting market to watch, Japan. Quite a serious start to the day, Michael.
It was actually, and I feel like we need to lighten it up, but I'm just kind of thinking ahead. It's been a big news day in the last 24 hours or so, and I can't see too much light coming up.
Oh, there's some good ones, don't you worry.
All right, I look forward to that. We'll be back in a moment with the rest of the day's business news. Sean, the head of the ACTU, Sally McManus, says Qantas is, quote, gaming the system by using loopholes in industrial relations laws that allow companies to pay staff on labour hire contracts less than those that they directly recruit.
Research conducted by the ACTU, which of course is the peak union body, found Qantas has split its cabin crew workforce across 14 companies and contractors, which the union group says drives down wages and conditions for workers. McManus said Qantas is the poster child for gaming the system to meet the KPIs of executives. Qantas rejected the claims that its use of labour hire is part of a concerted effort to drive down wages and conditions. The national carrier said that it has different cabin crew arrangements across Qantas, Jetstar and Qantas Link for both domestic and international cabin crew who live and work in places all around the world, particularly in places it flies to, like New Zealand and the United Kingdom.
Sean, is this in response to the big push by businesses to scuttle the federal government's same job, same pay legislation that's expected in Parliament this year? There's been a lot about that lately.
Yeah, we're going to hear plenty more as well. 8 peak organisations have launched a multi-million-dollar campaign against the proposed laws. Labor's proposal aims to stop companies paying workers on labour hire contracts less than those who are employed to do the same job on enterprise bargaining agreements. That's exactly what McManus was talking about at Qantas. Yesterday, Employment Minister Tony Burke told ABC Radio that businesses' passionate campaign against the government's policy was misguided. As you said, we're going to hear plenty about it.
Now, Sean, the share price of ASX, that's the company, that is, it tumbled 11% yesterday after the group said it faced much higher capital spending as it tries to upgrade its clearing and settlement infrastructure.
Yes, if you think of what the ASX does, its clearing and settlements infrastructure is its heart. Now, the company yesterday outlined its 5-year strategy, including near-term situational challenges, is how they put it. Chief Executive Helen Lofthouse, who hasn't been in the job very long, said those challenges include much-needed technology upgrades. It will keep its near 3-decade-old CHESS trading system running until 2032 because it's struggling to find a replacement. Now, ASX spent 7 years building an alternative to CHESS. It was meant to start in 2020. So it started 10 years ago building a replacement. It never got off the ground. That was abandoned. Now we're saying it's going to be there for another 10 years. That saga resulted in the Reserve Bank and ASIC criticising the company. Because it's going to have to spend so much on systems in coming years, ASX is going to lower its payout ratio next financial year. The bottom line, ASX needs to spend hundreds of millions of dollars in coming years to get itself back on track.
How about this one, Sean? The boss of Incitec Pivot has stepped down amid tensions over plans to split the company's explosives and fertilisers division.
Jean Johns has led the group for 5 years and has been pushing the demerger plan. Now she's left the business. The company first floated plans to split its explosives and fertilisers business back in 2019, but called off the idea in 2020 after a strategic review. Suddenly, it had been revived again in 2022, with Incitec saying it wanted to spin off its fertiliser business into a separate listed company, arguing it would help realise the full market valuation of both sides of the company. But the plan has never really had the full support of major shareholders, or not all the major shareholders, and the most recent half-year earnings disappointed. Now, the CEO who has been pushing the plan has left. Incitec Pivot's share price is down nearly 20% so far this year.
Can you imagine her farewell speech? I reckon it'll be something like, ladies and gentlemen, it's been a blast.
Smelly, but a blast.
Yeah. You got to say, running a fertilisers company, it's fertile ground for puns, isn't it?
Yeah.
That was pretty good.
Look, it wasn't bad, actually. I mean, I like the blast, actually. I thought that was pretty good.
Oh, thank you. I feel like I've taken it as a personal challenge now that we need to lighten this show up a little bit, because you promised it was going to get a little bit lighter, and so far.
Okay, from here on in, I promise it does get lighter.
Okay, well, it's been a great run, Sean, for growers the past couple of years with high rainfall, but this doesn't sound much lighter. A looming El Nino, where much of the continent will experience drier conditions, is set to cut wheat production by 1/3.
Farm exports are expected to drop by 17% to $65 billion next financial year. That's according to the Australian Bureau of Agricultural and Resource Economics and Sciences, RBA for short.
It's a catchy name, isn't it?
I lost my breath doing that. Anyway, over the past 3 years, the La Nina phenomenon has boosted crops, and even a forecast drop in exports next financial year to nearly 45 million tonnes will actually be a historically strong result. What it's really showing is just how good a couple of seasons farmers have had. Almost 60% of the winter crop production will be wheat, 22% barley and 11% granola. ABARES noted that farm input costs, including fertiliser and fuel, were falling from the peaks of last year. That will help the farmers, putting them in a strong position despite the softening in some commodity prices.
Now, I mentioned this one, Sean, at the top of the show. TikTok Australia has now overtaken rival platform Snapchat, saying it has 8.5 million local customers. 8.5 million, that is huge.
Are you on TikTok?
Yes, loosely.
Yes, well, I mean, you have an account.
Yes. Yeah, it's Michael Thompson, author, if anyone wants to follow me. Sorry, I thought I'd...
Shameless.
Yeah.
Shameless.
I have never pretended to have any dignity, Sean.
Right. Oh, dear. Do you post to it?
Occasionally.
I might follow you. So TikTok, which of course is the Chinese social media app, yesterday announced the milestone, the 8.5 million local customers, that's regular users, as well as now having 350,000 local businesses using the platform. TikTok has about 1 million more users than Snapchat, which in April confirmed it had a pool of about 7.5 million local users. The announcement comes a month after TikTok was banned on government devices. The company has also launched a TV app. Don't know whether you've recorded that one yet. Now, Facebook remains the most used social media platform in Australia. About 74% of people who use social media use Facebook. That's according to Meltwater. Next is Facebook Messenger, then Instagram, then TikTok. And just as an aside on this story, yesterday, Michael, Victorian Premier Daniel Andrews said that the Victorian government will scrap advertising in the printed newspapers of Nine and News Corp and pivot to online ads and social media. Quite a change, Michael.
Yes, it certainly is. That's a very significant change. And I'm also on Instagram at Michael Thompson Author as well.
Oh, shut up. Michael, just Finally, a couple of sports stories. We don't do them normally. Rugby Australia has a new boss, Phil Waugh. He played for the Wallabies 79 times, got the top job yesterday, and former Socceroos coach and current Celtic manager in Scotland, Ange Postecoglou, is reportedly taking over as manager of British football giant Tottenham Hotspurs. He's gone from Melbourne Victory to Tottenham Hotspurs. That is quite a rise. Good luck to both Phil Waugh and Ange.
Yeah, and anyone who's watched Ted Lasso now has an appreciation for what a manager of a British football team does.
I disagree with that. I think anyone that's watched Ted Lasso has no idea what a football manager has to do.
That's probably a very good point. I don't think Ted Lasso knows. In international news, Sean, the US Securities and Exchange Commission has accused Binance, the world's largest cryptocurrency exchange, of mishandling customer funds as well as lying to regulators and investors about its operations in a case filed in federal court.
The Wall Street regulator claimed Binance had been mixing billions of dollars in customer funds and secretly sending them to a separate company called Merit Peak Limited, which is controlled by Binance's founder, Changpeng Zhao. Regulators said in the lawsuit filed in the US District Court in Washington that Binance and Zhao enriched themselves by billions of US dollars while placing investors' assets at significant risk. In its court filing, the SEC cited a 2018 email from Binance's chief compliance officer saying, quote, "We do not want Binance.com to be regulated ever." That's according to a report in the New York Times. The charges against the big crypto exchange are the latest actions by US regulators trying to rein in crypto trading.
Sean, big news in the tech space. Apple has unveiled its long-awaited mixed reality headset after more than 7 years of development, and it vaults the company into a market that could someday transform computing.
The device, called Apple Vision Pro, was introduced at the annual Worldwide Developers Conference in California. The headset, according to Apple, is the next big thing for the company. The wearable device mixes both virtual and augmented reality, meaning it can fully engross the user in content with high-resolution displays, ideal for video watching. It also overlays apps on top of the wearer's field of view, letting messages and notifications pop up. Plenty of other announcements as well. One of the ones I really liked is that iPhone users will be able to swap their contact details simply by waving their phones next to each other as part of a major update to the phone software coming out in September. That one is known as Name Drop. Anyway, back to Apple Vision Pro. It's basically the company's first push into a major new category since the Apple Watch was launched back in 2015. Apple demonstrated the features and spotlighted content planned for the product, which looks like kind of high-tech ski goggles. It'll include games and interactive video from Walt Disney Co. The price, Michael, will be about $3,500 US. What's that, about 5,000 Aussie? Higher than most rival devices. It's expected to arrive in early 2024.
That's pretty pricey, but still, I kind of want to have a go, don't you?
Oh, totally. Yeah, it'd be very cool.
I think Fear and Greed needs to invest.
We'll have to ask Adam Lang whether he'll allow us to.
Oh, good luck. I don't know whether we'll have much luck convincing Adam to let us buy a virtual reality headset and then claim it as a tax deduction. All right. Finally, Sean, you did promise us a light story to finish on. This is a cracker. A wealthy driver has been fined 121,000 euros, or nearly the equivalent of $200,000 for speeding in Finland, where penalties are apparently calculated on the basis of an offender's income.
I love this story. So the guy's name, Anders Wickloff, is quoted in local media saying, "I really regret the matter."
Yeah, I bet you do.
I bet he does. So Wickloff was driving 82 kilometres in a 50-kilometre zone. It's not like he was doing triple the speed limit here. He was doing 82 in a 50-kilometre zone when police stopped and booked him over the weekend. Along with a fine, he's had his driver's licence suspended for 10 days. I mean, the moral of this is don't be too rich driving fast in Finland, clearly.
Well, maybe he'll learn his lesson.
Well, he does have a bit of a track record because apparently back in 2018, he was fined about 64,000 euros and 5 years earlier, about 95,000 euros for more traffic misdemeanors. He's chair of a holding company that includes businesses in logistics, helicopter services, real estate, trade and tourism sectors. So he's obviously very wealthy, but just his quote at the end of it, "I really regret the matter."
Pretty simple solution. Slow down.
Yeah.
All right. Up next is the Fear and Greed Daily Interview. You're speaking today with Eleanor Casapides, the Senior Manager of Tax Policy at CPA Australia.
Yes, that's all about what you should be doing to prepare for tax time when you're an investor.
Yeah, it's a really good one. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au and is brought to you today by Stake, one of our supporters here at Fear and Greed.
Now, Michael, it's a Wednesday.
It is, which means one thing.
You have been plugging yourself non-stop all show. Keep going.
Thank you for the opportunity, Sean. There is another podcast that comes out today, which is How Do They Afford That? Our sister podcast, which features Canna Campbell, the founder of Sugar Mama TV, and of course me as well. And funnily enough, the episode today, it's almost as though we timed this and planned this. It's all about tax time is on its way. And so it's less kind of focusing specifically on for investors and shares, and more broadly kind of on things that you can be doing just to get ready, just to make sure you're kind of maximizing the opportunities here. So you can find that, How Do They Afford That, wherever you listen to podcasts. We'll also put a link in today's show notes. There we go, Sean. Thank you very much.
Thank you, Michael.
It's Wednesday, the 7th of June, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. And stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode. Get yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.